first method to calculate national income is product method. This method is also known as value added method, and I would like to share that in India we follow the basic practices which are shared, which are discussed by the product method or value added method only. So in India, the basic method which we apply is the value added method only. In this method, we calculate the contribution of each producing enterprise in domestic territory. The steps of calculation can be divided like that: first, identifying and classifying the various enterprises in industrial sectors. Like for example, if it is a manufacturing unit, we need to identify which type of product it is manufacturing and in which industry we can locate it. So first is the categorization of the enterprises in different industries, and this process is being done by doing a licensing and registration of any manufacturing unit under any industry, right? So first we will classify the enterprises in industries, and then industries also we will make the categories like the primary, which is defined as A category, the secondary, which is defined as B category, and the tertiary sectors, which are also defined as C category enterprises or C category industries. This categorization will keep changing. Like for example, if any economy is prominently based on agriculture, so in primary sectors or A category, we will include the agriculture sector, the industries which are supporting agriculture sector. For example, any economy which is mainly service industries based. So like an example of Indian economy which is prominently based on service industries, like the major contribution is from service industry, so we would say that the prominent sector or primary sector or A category sector is service industry. So in this we may add banking and insurance, we may add academics, we may add IT industries, telecommunication industry. So but this categorization will keep changing according to the contribution of the industries into GDP. Like we would say that the dominant sector would go to the primary or A category, then mediocre sectors will come into secondary or B category, and the weak industries, weak sectors will come in tertiary or C category industries. So once we classify the industries, now we will estimate the net value added by each producing enterprise. So now here we will calculate the net value. How it will be calculated? It will be calculated after making the consideration of depreciation allowances from the gross value. So again, once we get the net value from the various sectors, we are going to add it back, and after adding this we'll have to see whether this value is at the factor cost or at the market price. Usually we calculate it at the market price and then we convert it on the factor cost, because ultimately, if you remember, I have mentioned that national income is when NNP is calculated at the factor cost. But it is not that easy, as I have explained to you. We need to keep in mind certain precautions at the time of calculation of national income through value added sectors. There are certain transactions which create certain confusion, so we need to keep in mind what are the inclusion and exclusion in the economic transactions at the time of calculating national income through value added method. So first I would mention the transactions or items to be included at the time of calculation of national income. First is any product which has been produced for self consumption is to be added while calculating the national income. Like the product for self consumption may be, an example is that a farmer has small piece of land and he is cultivating some little amount of grain which he is consuming on his own. He is not going to sell it into the market, but whatever is the monetary value of that grain which has been cultivated, that will add to the national the calculation of the national value. The second transaction may be imputed rent of self-occupied house. So now what is the imputed rent? Imputed rent is that if a person owns a house and he resides in this house on his own, what rent he would have raised if he would have rented the house out. For example, अगर उसने ये मकान किराए पर रखा होता, so what rent he would have earned, that is the imputed figure, which actually does not exist, but which should have been taken into consideration if this house would not have been occupied by the owner himself. So that should be added under the head of imputed income at the time of calculation of national income. Now the brokerage earned by dealers for second hand transactions, second hand sales. It is very important to keep in mind that the transaction of second hand or resale transactions are not to be considered at the time of calculation of national income. And the reason is clear that, for example, if I am reselling a car, this car has already been sold from the company outlet. The revenue has already been calculated in whichever year it would have been sold. Whatever profit company would have earned because of sale of that car, they have already paid tax to the government of India for the sale of that car. So actually the benefits raised out of that product has already been considered. So if we will take it again, it will be the double counting of the resource. So it has to be taken in mind that whenever there is a resale transaction, we are not going to consider it. But any brokerages which arise out of these resale transactions are to be considered, are to be added at the time of calculation of national income through value added method. Like for example, Maruti's True Value. So their entire business setup is based on resale of or the sale of used cars. So whatever revenue they are generating, that is a contribution for national income. Another point which should be included, which should be added to national income, is that the increase in the value of inventory. Like for example, an amount of metal rolls is under the possession of a factory. There is an increase in the metal value from last year to this year. So whatever is the increased portion, the increment has to be considered or included in the national income. Now we'll come to the points which are not to be included or which should be excluded at the time of calculating national income. So as I have already mentioned, first is the sale of second hand product, second hand machines. The reason I have already given that the contribution or the value added has already been considered. Second comes value of services provided by housewives. So if a lady is housewife, she is cooking food for the family, it is a service free of cost, we can say. But if she is employed in a hotel and working as a chef, obviously the same services which she is providing, she is going to generate revenue for that, and that will be added to the national value. But the food she is cooking or the service she is providing for the family in form of a housewife, that should not be added to the portion of national income. Next is the value of intermediate goods. So what are intermediate goods? Intermediate goods are like in a process of manufacturing a product. If there is a product which takes place in mid of the process, like if we are making sugar out of sugarcane, so in the mid of it we get jaggery. So it is an intermediate product which is going to be converted into the finished product later on. So the value of that intermediate product which gets consumed in this process is not to be added. So these are the certain points which we'll keep in mind when we are calculating national income through value added method. So once we calculate the GDP, we'll convert it into net domestic product. Now what we'll do, we will add back the NFIA, net factor income from abroad. Then we will calculate the NNP. We will calculate NNP at factor cost, and hence we will derive to the national income. The basic procedure of calculating national income will be followed, right? So the major challenges of calculation of national income through this method is that further categorization is not permanent. Industries keep changing their position from one category to the other category, and the business which is not registered, there are very so many businesses which are run from maybe residential outlets or which are not registered business, the value added to the nation or the resources of nation which are being consumed for running those businesses is not included in this value added method. So that is a challenge, that is a limitation for this method when we are calculating national income. So now we'll move to the second method, which is income method. So while calculating national income through income method, we'll focus on the second aspect, second element of national income, which is that the income which has been raised because of the production of those goods or the services. So in this method, national income is estimated by adding incomes earned by the factors of production for their factor services during the accounting year. Like for example, if in a manufacturing process the factor of production are man, machine, material, so what income they have earned because they were used to be a part of that manufacturing process, that will be added to calculate the national income. But again, in this process also we will have to take certain precautions at the time of calculation, and that will be, first of all, we will have to keep in mind that we are not going to include transfer income as in the calculation of national income. Now when we have a reference of national transfer income here, we need to understand what is transfer income and what are the different transactions which are included under the head of transfer income. So transfer income is the regular transfer of income which is not restricted to one financial year or one accounting year. Like for example, if a factory has hired a labor and the wages are being provided to this labor, but after the retirement of this labor, if any pensions or any gifts which are given to worker labor on different occasions, that is again a part of transfer income. So these sort of benefits in form of PF, gratuity, pension are not to be added at the time of calculation of national income, as they are covered under the head of transfer incomes. Also the gifts, the donations, it are again to be excluded at the time of calculation of national income through income method. Next is imputed income to be excluded. If you remember, in value added method, under the items to be included, it was mentioned that if it is a house which is self occupied by owner, which is a imputed rent, should be included. But here is a contradiction that which says that imputed income to be excluded at the time of calculation of national income. And the justification is that this income has actually not been raised. This cannot be calculated in accounting or monetary terms, so it has to be excluded. Now the other one is that income earned through illegal activities. Illegal activities, we know that government of India or government of any country would not permit. They have categorized it under illegal activities, which means that the government of that particular country is not interested to run that nature of business, that sort of business, and that is the reason it has been categorized as illegal activity. So whatever income has been raised through illegal activities, that is to be excluded at the time of calculation of national income through income method. Other is any windfall gains like money earned from lottery is again to be excluded, and then money received for sale and purchase of second hand goods, which is again the reason already explained that second hand goods have already given their contribution, have already added the value to the calculation of national income, and hence it should not be added back again. The limitations or challenges of this method is that at the time of identification of income, we need to categorize income under two different heads, which are capital income and which are labor income. So now what is capital income, what is labor income? So I would explain that as well. Like for example, it is a CA, it is a chartered accountant who is working on his own, who is giving services to his clients, and by providing these advisory services he is raising revenue. So this is his capital income. Whereas if he has hired some worker, if there is another enterprise which is into manufacturing, they have hired 10 worker or 5 worker, and then they are raising income, that will be part of labor income. So again, at the time of calculation of national income through this method, we have to really clarify whether the income is covered under the head of capital income, or whether this is covered under the head of labor income, and which is really a difficult task. So this is the limitation or challenge, we would say, is of this second method, which is income method. Coming to the third method, which is expenditure method, which focuses on the third element, that the expenditure being done for arranging the factors of production, we will calculate the national income. So again, this method says that the GDP is the sum total of all the final expenditures on various goods and services within the domestic territory of a country in one accounting year. Here we need to make a difference, find out the difference of net expenditure and expenditure on country's asset by foreign residents, which is defined as the foreign investments. So again, I would repeat that the difference of net expenditure, which is on the factor of production for goods and services, and the expenditure on country's asset, which is not a part of 1 years, which should not be adding value for 1 year only, but as it is an asset, it will be adding the value for more than 1 year by foreign residents. It has to be, when there is a difference in it, we subtract the expenditure on country's asset by foreign residents out of the net expenditure. It is defined as net foreign investment. When we have word investment here, it is clear that it is an investment. It is an expenditure which is for more than 1 year tenure. So that is the reason we calculate the net foreign investment in this expenditure method. The precautions we need to take care while calculating national income through this method is that goods produced in the preceding year to be excluded. Like for example, if in the inventory there are certain finished goods which are the leftovers of the previous year's production, so that should not be, the value of those goods should not be added to the products and services of this year, because the expenditure was made in the last year for the production of these goods. The second point to be excluded is that expenditure on intermediate goods to be excluded. Again, very clear that intermediate goods are those which are going to be consumed within this process itself. So these goods are not sold into the market, and they are not raising any income separately, and no separate expenditure is being made for the development of or generation of these intermediate goods. So the expenditure on intermediate goods is to be excluded. Third is that government expenditure on pensions and scholarships are to be excluded. For pensions, because it is going to be given, it will be given after not in the same accounting year, but after maybe 10 years or 20 years, when the employee get retired. Likewise, in the case of scholarships is not going to generate any income. Scholarship is the expenses made in form of scholarship is for a social cause, for to facilitate those meritorious or deserving candidates who cannot afford to pursue their education further, or pursue to learn a technical skill further on their own. So for that social cause, government is giving the scholarship, so that is to be excluded from the calculation of expenditures when we are calculating national income through expenditure method. Lastly is that expenditure on purchase of bonds and shares to be excluded again. Why so? Because the maturity of bonds and shares are usually for more than one accounting period. Here we are calculating national income for one particular accounting period. So that is the reason the expenditure made on bonds is to be excluded. So these are some points which are listed as precautions at the time of calculating national income through various different methods. So each method has their own set of precautions to be used when the national income is being calculated, but the most acceptable and most feasible method is the value added or product method.